Well, hello everybody. This is Peter. We have a few people on. We may have a few more people dribbling in. This isn't going to be a super long deal. A few weeks ago, I kind of went through my full, I don't know how many hundred symbol scroll. That's been done for the day, and what I'm down to is kind of whittling the list down. I have, I don't know, probably 30 symbols that I'll cover. Uh, they may not all be symbols that end up on the weekend factor update. We'll see. I may even add some. I'm not sure yet, but I have a pretty good handle on what I'm going to be looking on at for next week, and of course that includes positions that I have on now. And so I'll just kind of roll forward. Let me just mention that um, I'm not going to be taking any questions. However, if you want to carry this forward and ask specific questions on the member Twitter, I will put out just an invitation for follow-up questions, and if you would just then reply to that, and so we have a stream that would come off of a tweet that I will start. I'll try to take any questions that you might have that would be follow-ups to what we're going to talk about today. And so I'll go through these market by market and try to explain why I have them on the list. But for the most part, 99% of other markets or 95% of other markets that are not on this list have pretty much been nixed for any consideration that I might have for entering orders or trading. You will see that there's a few markets that I have on here for reasons other than specific trading ideas, but it may be just to point something out or something that deals with maybe a little longer term thinking that we're not up on now. And hopefully what you see is daily chart of Bitcoin. I've talked about this, and there's great interest in Bitcoin. I have great interest in Bitcoin, by the way, long term. I buy the Bitcoin narrative. I buy the fact that we have the potential to see Bitcoin at substantially higher prices. I'm going to pull up a log chart. I don't look at log charts. I look, for the most part, in the commodity and stock markets. I do look at log charts for cryptos only because of the dynamic price changes we've seen over a very short period of time. I think that log charts are probably more appropriate for Bitcoin than they are for most markets that I trade. And so most markets I trade, I do not look at log charts. I do in the case of the cryptos, but you see that Bitcoin has been working itself down here in a channel coming off of the June 26th high, and we remain in this bear channel. And the question is where Bitcoin might go. And I have a chart I just want to show you. I'm going to take a wild stab in the dark as to what possibly could occur with Bitcoin in the months ahead. This is not a prediction. It's kind of a pie in the sky look at some crazy idea, but it's, if I'm correct in the Bitcoin narrative, it might be how we get there. And so I'm going to show that here on a weekly chart. You will see that the correction we had in Bitcoin from the late 2017 high to the December 2018 low was about 12, 13 months in length. This chart does not go back very far, but if it were to go back further, you'd see that the 2013 to 2015 correction in Bitcoin also lasted from peak to valley about 12 to 13 months. And so I'm just projecting forward here and saying to myself, well, what if we have the same sort of situation setting up where we have a correction in Bitcoin from the late June high to some low tradable point in Bitcoin, and that would really take us out in a downward slanting move in Bitcoin out to a low that we won't see until July of 2020. And so I'm in no hurry to be jumping aboard the Bitcoin train. We're in a downtrend. I'm going to give it a full opportunity to work itself down. I'm watching the market. I'm interested in Bitcoin for long-term reasons that those who support the crypto story know by heart. And so anyway, that pretty much covers that. So I'm going to move on to other markets at this point. I'm going to start with the Dow. Get back out of a semi-log state here. And in the Dow, of course, I've covered this frequently, and I have got a lot of stock charts here today, and it's only because the equity markets have set themselves up quite nicely based on the charts, and not necessarily because that's the markets I love to trade, but it is markets right now that are providing the best chart opportunities, and so I'm responding accordingly. I don't think I've had this big a position in equity markets in the factor in my prop account or the factor tracking account ever. But it just so happens that I do now because I'm just trying to take the markets for what they offer. And let me make one point here too. That's an editorial point, and that deals with just kind of the choppiness that we've had in markets in 2019. I've been profitable in 2019, but I've been profitable because of risk management, and not because I've had these wonderful, splendid trades that have been great moves. I would much rather probably buy a factor of 5 or 10x, make money because of great trades rather than money management. But I'll take what the markets give me, and if it has to be through trade management, I'll take it through trade management. I would far prefer to have said, hey, there were 5 or 10 really great charts that I was able to key in on, and what great moves we had. That would be my preference, but again, I'll take what we can get. Looking at the Dow, I pointed out this continuation inverted head and shoulders that goes back to February 2018. We broke out briefly in July, pulled back and formed a symmetrical triangle on the daily chart. And now I've confirmed that, and it appears as if the Dow is well on its way to higher targets. I'm not in Dow futures. I'm in individuals. I took a pass on this breakout only because I felt I had enough leverage in other areas of equity exposure, and so I took a pass on the bull signal that we got in the Dow here a couple of weeks ago, going with the S&Ps instead, only because I believe that S&Ps were a stronger index than Dow. But I'm just including this chart for historical reasons. If you are in Dow and S&Ps instead of S&Ps, I think you've got a good trade on. All right, take a look at the Euro-US, the Euro currency. I just want to point out something. This is not probably even going to be a market that I include in this week's factor update, but it may be a market that I cover in the future. We have been in this bull trend, this trend line, which has held the euro currency going all the way back to the early 1970s. Now, the euro currency didn't exist back then, and so what this chart is going back further is a trade-weighted index of the European currencies that really equate to the euro currency as we know it today. But you can see that's been in a long-term historic bull trend against the US dollar, and we're now coming down toward this line. That's no reason to buy it. However, between that and a report that I will come out sometime in December, which many of you are familiar with, and that's the January effect in the European currency, the tendency for the euro currency to either create a annual top or bottom in January. This may set itself up for a buy. I don't know. But it's something that I'm going to watch here as the weeks progress. There's no signal on the daily chart that would indicate that it's time to buy euro currency. This has just been a choppy move down. I see nothing on the daily charts which would be a buy signal for me, but it's something that I'm watching here for the next couple of months. This is a nice little chart. And I'm pulling this up because I'm going to recreate an order here just to show you how I enter orders in all my markets. I use a Trade Navigator platform for entering orders. It's a great way to enter orders. And this is an order that I have in. I'm going to go ahead and cancel this and re-enter it just to show you the order execution capabilities that I have through Trade Navigator, which I really like. And it's really as simple as a point and click. And I have my Trade Navigator set up where my order flows go in a couple of different directions. I can select the FCM that it goes to through a point and click. It'll go in 3 different directions if I wanted to. And I can trade currencies, I can trade futures, and I can trade equities off this platform. But it's just a question of sending my orders. And I'm not going to keep this order in, but again, as an example, I like tight little patterns, even though this is not very long. For me, it's a tradable pattern. And I'm not sure that this is an order that I'll continue with into Sunday, but I'm just showing you here as an example of how I enter orders, where I select my size. In this case, for a factor tracking account, it would probably be about an 80,000 British pound order, and I can select whether it's a day order or a good till cancel, the stop order, or whatever. And it's just as simple as entering an order. I also, with this, can then take and attach a contingent stop order, which would be placed only in the case of this buy stop being executed. And so, for instance, I could take and stick down here and stick an order to liquidate this buy should this buy get executed, 80,000 pound Canada at the stop order. I would set it up to be triggered at that level. So again, I'd make it a day order. I'm going to cancel this order not too long after we get off the phone. But again, it just shows the example of the flexibility I like and use in the Trade Navigator platform. Where here, what I've done is just entered a sell stop that would be entered into the order flow should the buy stock get executed. And again, I'll just cancel this out. And what it'll do is it'll also cancel out the contingency order automatically, so no order's working. But I like these tight little patterns, and these patterns have tended to work better than long and lazy patterns throughout 2019. Here's an example of another tight little pattern. This is a pennant. What's the difference between a pennant and a symmetrical triangle? Mainly the width of it as well as the length of it. In this case, we're only about 4 weeks, and so we get off past 6 weeks, and then we have to redefine the pennant as a symmetrical triangle. But again, I like these tight little patterns which are well defined. And this for me would be a swing trade that might last anywhere from a week to 2 weeks, probably not much longer than that. First, let me show, this is New Zealand US dollar. This is a trade I tried just recently based on a head and shoulders that was completed using this little price area here is my right shoulder, which was a very stunted shoulder. We broke out and failed, and now we seem to be holding. And so the question now, have we just enlarged this head and shoulders? If so, this is a tradable pattern for me. If this is a trade I go with and decide on the Sunday that I'm going to go with, I'd stick a sell stop over this false breakup, premature breakout high by 5, 6, 7 ticks points, and that would be where my buy stop is. However, I'm always looking at, in this case, it's a New Zealand dollar play. And do I want to trade the New Zealand US dollar as my New Zealand play, or do I want to trade New Zealand Canadian dollar? This is something that I often will look at. In this case, we have a cleaner head and shoulders bottom. We have a cleaner right shoulder. We have a cleaner neckline. And so if this is a trade that I pick up on for order entry on Sunday, I'm probably much more likely to go with the New Zealand Canadian dollar than the New Zealand US dollar. I'm not going to go with both. I'll pick the one that I think is the cleanest, and that's the direction I'll go. And at this point, it looks like it would be New Zealand Canadian dollar. This is not a tradable index. This is the Shanghai, but it is a proxy index. It's really the big companies. This is the S&P 500 of China, and we have an inverted head and shoulders. Should we complete this? For me, it would be a really good sign that the Chinese market is going to make a big run to catch up with the U.S. market and other markets in Asia, which have been posting new highs. This is a market that I remain in. I've taken half profits in Apple, and as I pointed out in the last factor update, I'm going to manage the other half that I still have on, even though we've gone through the target. I'm going to manage it using the 18-day moving average, which you can lightly see in gray. And perhaps it won't be this week. It'll be a subsequent week or two. I will try to lay out what my mechanical rules would be relative to managing a position using some sort of trend following method. It's something that I do have specific rules on, and I know those of you who are systematic trend followers also have specific rules. I don't proclaim that my rules are the best rules or even great rules, but they're the rules that I try to use consistently when I use moving averages to manage a trade. This is a position that factor tracking account is in, as is this. This is the iShares All World Index, which we have broken out in. Take a look at the weekly chart. This is the pattern that we're looking at, is this massive continuation head and shoulders pattern. And again, sometimes I pointed this out, depending on whether how you deal with dividends and whether they're incorporated in the price or moved out, sometimes you can get a slightly different look at a pattern. Whether we split or don't split. But this is the position I'm in, and this completed head and shoulders really was launched by this rectangle over in the right shoulder. I featured Berkshire in the past as a head and shoulders failure pattern. As I have mentioned, this is, I think I mentioned on Factor Member Twitter way early in this week. It's not a trade I'm taking, mainly because I see other trades that I like better. I would rather take a market that's launching into all-time new highs than a market that's just completing an area pattern that still hasn't made a new highs, as is the case here in Berkshire. Just point out cocoa. This has been a huge move this week in cocoa that I have not been a participant in because I don't trade cocoa. But nevertheless, I do want, when we see a great example of a pattern, I like to show it. And this, of course, this move that we had early in the week completed a head and shoulders failure pattern that you see right here. Do I regret not being long this such an easy, nice looking pattern? No, not at all. It's a market that I've decided not to trade. I know that some of you, because I've communicated with you, do trade cocoa and caught this. My congratulations to you. I have no regrets about ever not trading cocoa, cotton, and New York coffee. Here we have Costco. I just make a point on equities. I'm pretty loaded on equities for the tracking account. I'm not going to be doing any more equity futures contracts for tracking account, but I will pick off some individual equity names that I can trade at lower risk and perhaps in more defined risk point. Costco will be one. I will buy a new high in Costco. Should we get a new high based on this cup and handle pattern. Here's a trade that I entered this week, and I thank a member of the Factor community for brought this name to me by email early in the week, and it caught my attention. I believe I tweeted out something on this during this week, but we have quite an interesting pattern. I don't have the price history that goes back here on the Equitable AXA. But you can see the makings of a left shoulder. Now we have a right shoulder, and we've completed this right shoulder by way of a continuation head and shoulders. Left shoulder head, right shoulder. We've broken out. We retested it Wednesday. I saw the retest on Wednesday and moved in to buy it. Did not buy the breakout in this because I didn't know about it that early in the week. But it is a market. It is a trade I have on now. S&Ps. I'm in the S&P market. Futures. This is an up-slanted neckline. You know that the Dow is a flat neckline, and up-slanted neckline by nature is a stronger market than a horizontal neckline. That's why I chose the S&Ps over the Dow. But we have this continuation head and shoulders. We broke out on the daily chart of this symmetrical triangle, which was a buy signal. Again, it would have been nice had this been an ascending triangle, not a symmetrical triangle, but yet it was a pretty clean break. And perhaps this will be a market that will follow through. We've not had a lot of follow through markets this year. Perhaps the U.S. equity market is going to be one. We'll have to wait and see. You know, we put positions on, we never know when we have them on exactly what's going to happen. I mean, the trades can look well at first and then falter. And so we don't want to ever count our chickens until they hatch. But this is a market that so far has performed quite well. You can see that sometimes the continuation chart will take a little different look than the individual contract months. In this case, on the continuation chart, we broke out on the 28th of a symmetrical triangle. In the case of the December futures, we actually broke out of what I believed was a horizontal pattern, which is a cleaner way to break out. And so I'm long a double tranche here. I'm probably going to play this I'm going to give this market a chance. It's my attitude in equities is on individual equities. I'll be tight in my risk management and give the futures side of the trade a little bit more room. You know, I came into the week short gold, and what we had was I'll try to blow this up and show you it. But we had the 3-day trailing stop rule. The 12th was the low day. The 13th was the setup day. 14th was the trigger day. And I covered half of my short gold position based on this. I would have covered the entire position had the high on Thursday gotten to break even on the trade. My rule on the 3-day trailing stop rule in general is I'll execute it either at 70% of the distance to the target, or if in the process of triggering the rule, my trade moves into a loss. In this case, it didn't move into a loss. I've now set Thursday's high as my pivot point to cover the remaining position I have on in gold. Just look at DAX. This is a trade I'm not in. I traded DAX, you know, earlier here. I'm not in DAX right now, but I'm just pointing it out. Some of you familiar with the Darvas box as a way to pyramid a campaign trade. I don't pyramid. I don't do campaign trades with a pyramiding function, but I will acknowledge that pyramiding trades with the Darvas box can be a way to accumulate large profits in the market. But it is also obviously a way where drawdowns will be commensurate with that. But I did find this chart a little bit interesting when I saw it, so I'm just simply pointing it out. Those of you who are Factor members and have been throughout the year will remember that we did trade this head and shoulders bottom index, which was a really nice pattern. Obviously, I didn't stay with the market past the target, and we've gone a lot further. But again, just pointing out the Darvas box. I'm short the Euro Swiss and have been for a long time. This is a trade that for a futures trader, it's been a trade I've been in now since September 11th. And, you know, that's moving on now to, 10, 11 weeks, which for me is a trade that normally I define as a trade with a gray beard. And but nevertheless, we've seen some big support here at par 72 on the market, and I'm now using the par 75 as my pivot to exit the trade. feeling that whenever you see a low a number of days at that level, particularly in a market that is relatively fixed by in this case the Swiss National Bank, I'll pay attention to that, and I'll cover the market if it starts to rally. This is just a micro S&P, the same chart as I've showed you from the S&P. Microsoft, again, I'm long Microsoft. We've got a couple of different targets in Microsoft, and so I just want to point them out. Normally, when we have a narrow, tight range, and I've shown a market, this is another market that had a narrow, tight range. How do I define a narrow range? Generally, it would be a trading range that drifts sideways within a range of 10% of the value of the underlying, which we did here. You have your measured move that takes place, which is basically a move out of the pattern equal distance to the width of the pattern, which is the 153.14 target. But oftentimes with a narrow range such as this, whether it be a rectangle or an ascending triangle, you can double or triple that target to get a more realistic price. In this case, I'm converting my trade into a multiple tranche position, and I'll use the 153XX and the 163XX as targets for the tranches. And we broke out and drifted sideways for 8 days, which has really allowed me now to use the 153.98 pivot to move my stop and to protect the trade. NASDAQ, I pointed out this NASDAQ chart that I think that what we've seen is we completed really a large running wedge in this market. And yeah, many of you will point out that the rising wedge is a bearish pattern. Indeed it is. And I'm not sure that we can really say that we punched through the top of it decisively. But again, this is the same kind of looking pattern as we had at Apple, where we also had the running wedge that we broke out of, stalled for a few days, and then started to climb. And so that's NASDAQ. I'm not going to take NASDAQ futures, mainly because I think I've got enough stock on through the S&P and through individual equity names to not be putting more on. This is another chart that was brought to my attention by a Factor member, and I appreciate you very much for bringing this to my attention early in the week. But it was an inverted head and shoulders in Peloton. Of course, that's the stationary bike. This could be a growth stock, and when you can catch a growth stock, sometimes your targets will go far, far, far beyond what you think they will. And while we have a target at 30.32, I'm going to have to make a decision whether I'm just going to move the stock or break even as I can and let this thing go its merry way. Because sometimes with growth stocks such as this, you end up having a round tripper where you go right back and take a loss or a break even. But these are the kind of stocks that can give you 5x, 10x gain on the underlying. And so, this could be a stop that does nothing, or it could be a stock that goes to $100. And so I'll probably treat it as the same, only because it's a new issue growth stock. It doesn't have earnings, but who knows? Who knows what happens to it? I'm not a fundamentalist, but I'm only looking and saying, okay, if I have a stock that could give me growth stock type gain, and I can find a place to break even, well, why would I be interested in taking the first put profit out of the gate? Here's the Russell. I pointed out the Russell in the past. I'm not interested again in futures, but the small cap stock has not participated in the advance in U.S. equities. Will it participate? Maybe. I pointed out that 1621 level is big resistance. Should you clear it, perhaps the Russell can have a run. Not interested in it, but it's an interesting chart. Sugar was a market I pointed out earlier in the week. I have not traded it, mainly because I really didn't like the pattern. I don't want to have to trade a stock that's based on just based on a trend line. Number one, a trend line for me is, it's an interesting thing to draw, but I generally do not trade trend lines. They're diagonal chart construction issues. I would have traded sugar had I felt that this area here was a better defined 5-point symmetrical triangle bottom. I just thought that this 5th point was a 2-day decline, really didn't define it properly. I had sugar pull back, and this is the March contract, in this 1220 area and held for a few days and then started up. It might have been a market I traded. This will not be in the factor update. I'm just pointing it out. I'm not interested in trading sugar. I'm just bringing it to your attention as an example of charts. I love charting, and I like when I see different looks in charts. Silver, I'm of the belief that silver has completed a huge double bottom here, and that if you look even on a larger perspective, we could have a huge double bottom in silver, that I say sugar and silver, that goes back to 2014, the third quarter of 2014, that we could be building a base for a gigantic bull market in silver. And so I'm watching it. It's nothing I'm going to have orders in next week, but it's something that I'm going to keep on my list as things to watch. Otherwise, I might miss the thing entirely. But I'm going to be more apt to trade an ETF in silver unless I really get a very crisp chart on the futures contract, mainly because silver is a volatile market. It's the kind of market that can knock you out of a futures position, but perhaps with an ETF position, you can get aboard and get aboard it to keep. Taiwan Semiconductor, I'm long this stock based on this continuation head and shoulders. Let me just make one point. I see it on Twitter all the time where people will say, well, there is not such a thing as a continuation head and shoulders, inverted head and shoulders. And that is the thinking of Elliottians. That's not the thinking of classical chartists. And I always point out that if that was the case, then why does Schaubacher in his 1933 book and Edwards and McGee in their 1946 book both put in continuation head and shoulders and call them that by name? While it wasn't their favorite pattern, they definitely recognized the pattern as a legitimate pattern. And so that's generally my answer, is if it was good enough for the fathers of classical charting, it's good enough for me. Whether it's not good enough for Elliott's, well, that's their issue, not mine. All right. This is the D's contract to Dow. I'm looking at soybean meal. I'm not sure what I'm going to do with it, and I was playing around with it today. I was tempted to enter an order this morning, and I did not. This is really a nuanced chart, but I'll point it out. This is D's meal. This is actually a trade that I took for factor tracking here a month or so ago, where we had this head and shoulders bottom that broke out, ended up failing. And we've retested it and now put in this head and shoulders bottom pattern here. Just grain markets sometimes give us these charts. They're really convoluted, but sometimes they can give us good trades as convoluted charts. We arguably broke out of this small head and shoulders. Let me try to bring it up on a 360 chart. Maybe you can see it a little bit better. I will use 360 charts as trigger points, not directionally, but you can argue that at least on the close, and we have closed in the grain markets today, we did complete this. Might have put an order in to try to cherry pick a slight dip over the weekend. On Sunday, I don't know yet. I still have to consider that. Now, well, am I interested in trading this based on the beauty of the chart? No, absolutely not. But if I have repeatedly said now for several years that I will take every excuse to be long grains that I can find. I've tried recently Kansas City wheat. I will continue to take every excuse I have to be long the grain markets, because I think the grain markets and there's no reason to buy a market because it's cheap. But the grain markets are really right at the levels I was at when I started trading in 1974, 75. You know, I traded corn in 1975 at the price it's at right now. And so I just believe at some point in time we're going to get a raw material bull market that's, and a bull market in grains an exciting thing, and you rip your socks off. And so, you know, I will continue when I see excuses, not necessarily beautiful charts, but exclusive excuses to be long grains. I'm going to take a shot at it. Sooner or later, I'll be right. And, you know, until then, who knows? I just kind of show you in this kind of a post-mortem, but I had viewed the treasuries as a symmetrical triangle top. And, you know, why did I consider this to be a symmetrical triangle top when we had this weak fit point when I didn't sugar? Well, I did only because I just felt that, you know, we were going to see another run at low interest rates, or we're going to see, you know, a run at higher interest rates than we're at right now. So we broke out of this. I took a position on this on the 7th, but this is the kind of chart that I'm not going to sit with a trade like this. You know, when I can move a trade like this to break even, I'm going to do it. In this particular case, I was short 1, 2, 3, 4 days, and I still don't have money in the trade. You know, this trade eventually could be right, but it's going to be right without me. So that kind of wraps it up. That I might have another market or two that I put into this week's update. Maybe I'll take another run at a few markets that kind of made not my long list, but the next list is kind of a hybrid between my short list and the list that comes out of my long scroll. And so this is where I'm at. This probably it's going to represent at least 95% of the markets I'm going to talk about. I've got a lot of positions on now that represent equity exposure, and I will take every opportunity I can to bleed some of that risk out, only because I'm not going to take the number of positions I have and do a round tripper on them. That's when I can have a 10, 15% drawdown, and that's just more of a drawdown than I have any interest at 72 years old to have. So, hey, I will pick this whole thing up on Factor Member Twitter. Wait for me to post just an invitation to participate and try to keep any questions you have for me or in conversation with each other as a follow-up on the same stream, tweet stream, and that'll make it a lot easier for me to kind of follow what's going on. So this is recorded. We will post the recording later today. Not for those of you who missed it, because if you're hearing me right now, you didn't miss it. So anyway, have a good close to your Friday, a good long weekend. My day is still a long way to go, because I have to take what I have here and do some narrative and work with Jolene to get it proofread and laid out and so forth, ready to be sent out tomorrow morning. So anyway, nice talking to you at all, and I will be available for any follow-up questions, not necessarily all of them, depends on my day, but on Member Twitter. So anyway, Jolene, you can shut us down and do what you need to do. Thank you all.